Hi there, this is David Roche, and this is Quantum Strategy, and this is the micro podcast on macro matters. Okay, I thought we'd do something quite different this morning, and we just look at all the things that could go right and wrong in the world of investment in 2025. First, the wars. The biggest war, obviously, Ukraine, whether Ukraine is ditched, which I doubt, or whether the war is escalated in order to force Putin to the negotiating table, which I think is the scenario, and could well result in something close to a collapse of the Russian economy in the second half of 2025. In other words, Trump does not walk away from Ukraine because that would not be peace through strength. That would actually be peace on the model of Kabul, and he doesn't want to be the author of that. But the biggest war is the probably inevitable war between Israel and Tehran and Iran. That war is likely because the proxies of Iran having been destroyed, Hezbollah and Hamas, they have no way of defending themselves except nuclear arms, and they're going to go for hell broke to get nuclear arms, and Israel will not let them do that. It's not going to happen right now because President Trump doesn't want to be the person who gets the US into wars. He's very proud of his record of getting them out of wars. But whether it's with the United States, without the United States, Israel will not tolerate a nuclear Iran. That war will affect markets when it happens, because you cannot possibly do surgical strikes to decapitate the Iranian regime and to knock its nuclear arsenal and supply chain back into the Stone Ages without affecting the ability of Iran to export oil through the Straits of Hormuz, and possibly the action of Iran to retaliate and escalate by stopping other countries like Saudi Arabia exporting oil through the Gulf too. So that's, I think, what could go wrong. What could go right if none of that happens, obviously. Right, look at some other things. Central bank policy. The risk there is located in the United States. It is the tariffs increase inflation. They also increase the costs of many US companies. So over 70% of exports from China to the US are actually inputs to industry in the United States. So they invest less and they make less money. You could get a picture of stagflation where imported tariffs increase consumer prices, and they also lessen the optimism of industry and lead to a downturn in investment. If you get that sort of scenario, well, what happens? Well, what is sure is the Fed would not be decreasing interest rates. It would probably be raising interest rates. And I think an awful lot of the optimism in the bubble assets, like, for instance, private equity and non-bank credit, are the big ones with an economic kickback, which would be extraordinary if the asset prices started to fall. Those sort of areas are very vulnerable to a reversal in expectations of interest rates. And I'm almost sure you will get that some point in the course of 2025. Then, of course, there is also the risk that Trump attacks the Fed. If he attacks the Fed and gets some traction legally to change the mandate of the Fed or change its leadership, then I think the days of the strong dollar are over. And that would also, of course, add to inflation by decreasing the value of the dollar and increasing the value of all of its imports, which are a lot. And finally, of course, you're looking at a pretty unsustainable budget deficit in the United States, with 6% of GDP as the budget deficit, about a little bit higher than France. And we're looking at debt to GDP of 120%, which is motoring on towards Italy at 130%. At some point in time, the bond vigilantes are going to say enough is enough. And then you'll get an increase in long-term interest rates, very probably at about the same time as inflation expectations are rising and the Fed is increasing short-term rates. The yield curve might steepen, but the economy would not survive. I think the feedback loops through confidence, through credit, through asset prices are far too great for the economy to just motor on and the stock market to go down. So that's the negative side. The positive side is if his tariffs raise enough tax to allow him to cut taxes for other people, then you wouldn't get that pressure as much. If, for example, he was more bombast than real full-fanged attack in tariffs and say increase Chinese tariffs by 10% and European tariffs not at all, then I think that's the happy Goldilocks scenario coming through for another year. And that's the good thing that could happen. And then China, stimulus fails, the term stimulus does not fail. My bet is that stimulus fails, and this increases the likelihood of unrest and extremist reactions from the presidency, President Xi. And I think it would increase the risks rather than decrease the risks of action against Taiwan, which would probably take the form of a blockade. My own view is that's one of the ones which is pretty far down the road. I don't think China will actually do anything about Taiwan in 2025, but 2027 might be another story altogether. In any case, I think China is going to remain not a collapsing story, but a very dull story economically in the world, which leaves the US as the only place that's really growing, which I'm not sure is sustainable in the long term, because that's a form of disequilibrium within the world economy, which may topple over like a pile of sand at the moment you least expect it. Now, my own theory is that the Russian economy starts to show real strain, and supplies to the front in Ukraine start to show big shortages of things like armor in the second half of next year, and that means that there's an opportunity to put Russia back in its box, or as I like to say, make Russia small again, which is, of course, a high-risk operation, because it's not sure that Putin would survive it. And it's certainly not, in my mind, at all certain that some form of decent democracy, rule of law, would succeed it. I think the Russians have very little proclivity for the rule of law or for democracy. And then there's the big unknown, which is, of course, natural catastrophes. And now they will happen or they won't happen, and we don't know when they're going to happen, but I'm pretty convinced that we don't care enough about the planet to save it, and that the ticking time bomb of dislocation within the workings of the watch, which is nature and its interlinkages, has already begun. We just can't see it or hear it because our political leadership is so thoroughly mediocre. But I think in the long run, it would mean that I would need to have a discount factor which valued equity profits only for a horizon of 10 years, because I'm not sure we've got longer than that. Now, coming up to this week, just Christmas week, what are we looking at? We're looking at the BOJ minutes today, explaining why they did nothing. I could tell you that. Tomorrow, we've got US durable goods orders and new home sales. And on Thursday, it's US initial jobless claims. And of course, Japan unemployment and the BOJ's survey of opinions of economic participants and industrial production. And then on Friday, wholesale and retail inventories in the United States and case-shiller home prices. I don't think any of them are going to move markets in any particular direction. And it's a week in which the major event, hopefully for all of you, is having a good time and having some time off. Until I talk again, probably in the new year, have a good festive period.